Our last updated Dash, we've actually broken our orange pattern with the swoon across all the cryptocurrencies. And I have since exited all my short and intermediate term crypto positions. I've been posting about them, done numerous updates on the entire space, and Dash is no exception to the casualties. We had a pattern that was calling for possibly a bottom getting near and then rally, but that has broken down with our collapse through our support at 102.17, around somewhere around there. We're going to take a closer look at that momentarily. Now, we do have reason to be optimistic that the bottom might be near because we are quite oversold. We've hit some key Fibonacci resistances. We can actually see here, based on what I was calling my first wave, we may have hit the 1.764 extension of what I was calling 1-2 here perfectly. And if not, may have some a little bit lower to go. This will be a bit more clear on the big picture. But if we have bottom, I would expect to see a 5-wave rally, at least to the 170 mark, and then a 3-wave corrective pullback. Otherwise, we probably have a little bit lower to go, may have a slow consolidation before a final lower low later on. Now, if you want to follow along on my charts, please feel free to look at the description. I'll have a link posted there with this specific chart, the long-term logarithmic chart, which gives you the big picture. So here things are a bit more clear on what's going on because we had our peak on in May of 2021. We had a big sharp pullback, which I was calling the A wave. And it turns out this whole thing was actually a B wave. And the reason I have invalidated our orange bullish pattern is because we made a lower low than the low that we hit in the midsummer. So we hit a low of right around 107, 101, something like that on June 23rd. That's the exact date. And basically our entire rally thus far has been a fake out. We are following the lead of some of the other altcoins such as Bitcoin Cash and Ethereum Classic, in that we have had a lower low. So any bullish development here has been invalidated. And once again, the orange pattern has invalidated with that break of 102.17, 100 right in that region, which means, again, we made a lower low. And therefore, this can't be a 1-2 because our second wave pullback has basically surpassed the origin of our origin of the first wave. So orange pattern is dead. This will be removed on the next update. So what does that leave us with? Well, we have our red pattern, which was the alt pattern that I presented last time. And we have a bit more clarity now than we had before, in which we have our 1-2 down. And then we are very likely in the middle of our third wave down if this red pattern is the pattern in operation. And if we look at this extension here based on this 1-2, we would expect our third wave to get somewhere between the 1.32 and the 1.61 extensions. And as a matter of fact, we have surpassed that too. So we actually broke down through what would be your normal extension. So that's not necessarily a bad thing. That could mean that we're done. This could be the whole correction. This whole thing could count as a 5 down. It could be 1, 2, 3, 4, 5. And I haven't marked the subwaves in green, but that is what the green pattern is showing. If we are done, we should start seeing some rallying very soon. When we look at our MACD, I'm going to zoom up just a bit to give a better look. We haven't seen this thing turning around yet on the long-term picture, but on the short-term picture, we do actually have some evidence that we may be bottoming. We had our MACD bottom right on what is presumably a smaller third wave, and then we had a lower low without the MACD going lower. So that is a positive sign that potentially we are done bottoming and crashing, but we need to see some bullish action real fast if we really are done. We may have a nominally lower low before we're ready to rally again. Otherwise, our red pattern will continue being the main pattern. So just to clarify, the red pattern is my primary until we see a 5-wave rally back up. And of course, the red pattern calls for a pullback, basically a corrective pullback within our C wave down. That could take us from wherever we are right now, 1.68, all the way up into the low to mid 100s range. Could be a pretty sharp pullback, especially if we have an ending diagonal. You might see your fourth wave go all the way back up here to right around 150, 151 in that region before we have a final sharp pullback. That could take us all the way down to the 60s range. So I have the official extension being 65, but because we extended past the 1.61 extension here, might drop all the way down to 61. The $61 mark is a hard support because it would mark the 1-to-1 extension, the 1.0 extension of our larger A wave. So if we take this as the A wave, all the rallying in 2021 as a B wave, our C wave, if it hits the 1.0 extension, which is the most common extension you see for a C wave, that would put us right at $61. So there's some Fibonacci confluence there. It's also right around where the 76.4% retrace would be of this entire thing, which is a common deep retrace for a second wave. You see that quite often, especially in cryptos and commodities. And of course, it falls right around that extension of the 1-2 on this downside. So there's a lot of confluence in that region. If we do follow the red pattern, I would expect to see a bounce very soon, probably a 3-wave bounce, A, B, C. Might take a few weeks, a month or two before we have a final spike down. So that is my primary expectation. But again, you never know if we're done. We are quite oversold right now. You don't see it as much as Dash as you do in other cryptos such as Bitcoin and Ethereum. We've actually seen quite a bounce in some of the other cryptos such as Ethereum. I think we touched 2,500 plus today, so big spike up. But so far, our bounce back looks kind of corrective. If I zoom up a little bit more closely in Ethereum, it could be 5 up. It could be interpreted as a corrective wave up. This actually looks like I'm going to zoom up just a bit more, 5-minute view. Looks like an A, B, C with an impulsive C wave pattern. So again, we may be near a bottom, may have a nominal lower low to go, or we may be ready to rally. If we are going to follow the green pattern, we're not going to see this thing rocket directly to this region here. More likely, you're going to see a smaller impulsive 5-wave structure up. So imagine you have a little 5-wave structure that goes up into the low 100s range, you have a 3-wave pullback, and eventually it would extend into this box. And this box is, of course, based on this larger 1-2 structure. You typically have your subwave 1 fall between the 0.32 and the 0.618 extensions of this larger scale, larger degree 1-2. So if we see anything like that, that would be the place to go. And well, if we see a smaller impulse, that would be a very clear sign to get back in. I will very likely be taking long positions again. As I mentioned, I'm out of all my short and intermediate term crypto holdings. So that would be a very good sign. I'm going to keep you guys updated on this. If I see some divergences, if I see some impulsive behavior, I'm going to start putting out the BTFD warnings out there. I should call them alerts, not warnings. If you're planning to get in and you haven't started yet, dollar cost averaging, what could work. It might not be a bad time to get in yet. Like I said, I'm still waiting to see more of a impulsive development to confirm our bottom before getting in. So till next time, thank you for watching and happy trading.